Hi, it's your asset protector, and I want to talk to you about something very real and very serious. Maybe you haven't thought about this, but I just want to put this on your mind. Market risk and volatility. Those are two important things to think about when you are investing and saving your money for retirement because they're not just numbers. They can derail your retirement plan or collapse your plan and create some serious sleepless nights for you. You think you up at night now and you're worried about all that's going on in DC and all the things that's going on in the news. Wait until your money is at stake. See, the real danger of having such a crisis is making emotional decisions when the market swings. And the market will swing. The market goes up and the market goes down. No one knows when it's going to do one or the other, but we can assure you that the market is going to go up and down. So market downturns don't just hurt your investments. They can completely derail your retirement plan. I mean, it can wipe you out. You can lose 80%, 90%, 10%. You can lose 100% of your money because it's in the market. That is the risk of having your money in the market. So now we need to talk about having your money in more than one, having your eggs in more than one basket, as they used to say. I'm sure your mama used to talk about that. So let's talk about market risk and volatility and how it really affects your future. So when the market dips, and like I said, the market will dip, the market ebbs and flows, right? Two things are for sure to happen. Number one, your portfolio, meaning the money that you have in your account, is going to drop in value when the market crashes or when the market goes down. And the next thing is you're human. Your emotions are going to get tested, right? They are going to get tested. And then you're going to be deciding if you should make a fast move or not. So for people who've already retired, we call those people retirees or close to retirement. If you are in retirement, congratulations. If you are close to retirement, congratulations in advance. But look at it this way, a 20% drop in your portfolio can mean postponing your retirement. Say it again. A 20% drop in your retirement account could mean that you have to work longer. Now, they're already talking about increasing the age, right? Upward. I think it's about 67 now. And by the year 2033, it's projected to be at 33. By the year 2033, it is projected to be at age 73. So people are living longer because of all of the advances in technology and in medical advances. People are learning more about their health, exercising longer, eating better. We are in a woke time, right? And just because someone is woke don't mean they are awake. So running out of money faster than expected, that could happen if there's a drop and you do not have, and you have all your eggs in one basket. In other words, you do not diversify. Diversification is not just a word, it's a way of life. And it is a way to safeguard your assets that you've already worked so hard to amass. So volatility isn't just about numbers. It's about that stress of seeing your nest egg shrink and the temptation to make rushed, knee-jerk decisions. This happened, let me go and pull my money, right? I've had people that I've talked to have done that. Hell, I did it myself in 2020. When Joe Biden came in and everything was looking crazy and they was talking crazy and I was listening to people on the television doing all this talking. And what did I do? I pulled out a lot of my money, right? I had a lot of money invested in Bitcoin. Now, I'm still invested in Bitcoin, but I would have been much further had I not made a knee-jerk decision and pulled my money out of emotional fear. Emotional decisions like pulling your money out at the bottom or chasing risk to gains at the top, those things can be detrimental. When you see stock and everybody's talking about, well, Amazon stock is doing this, Amazon stock, everybody's buying up stock, right? Warren Buffett just bought up $800 million worth of stock. It's too late. The time to get in is when this stock is low. So get in before people are talking about it. And learn, folks, how to follow your own heart and your own conviction. Because nobody really knows what the stock market is going to do. Like listened to people and they made me afraid, and I did a knee-jerk, stupid thing. Pulling my money out was the worst decision I could have done. Because now look where Bitcoin is at. And hell, in 2017, when I was first introduced to the concept of Bitcoin and that Bitcoin even existed, I was already 4 years late. And it was still low. Didn't understand it. Didn't think it was going to do anything. But look at where it is now, right? It's over $115,000 as I make this video. And guess what? By the end of this year, or by Q2 of next year, is projected to be between $150,000 to $250,000 per coin. Use your own heart. Don't let people make these decisions for you. You putting the money in the market, you could lose it, right? But what if that money actually works in your favor? So I just wanted to throw that out there, my little 2 cents worth. So that's why having a strategy to reduce market exposure and create guaranteed income streams is critical. There are products that's out there that you can put your money into, and those products could guard you or shield you from taxes, or at least it could mitigate your taxes or prolongate your taxes from you having to pay taxes right up front. And then the money that you have in there is growing tax deferred, and you only have to pay taxes on money when you pull it out and not on your gains. I know some of you have 401ks. I get it. And I always say 401k, first and foremost, is a good strategy, but it's not necessarily the best strategy and not necessarily the only strategy. It has its tax benefits. That's true. It has that. But at the end of the day, it's there to benefit your supervisor, the company that you work for. But you can pull your money out and have a self-directed account, right, agreement, where you now are in control of your own money, right? You can put your money into indices or indexes that you want to put your money into and monitor your own money, because your employer is going to set it and forget it, just like the microwave. You put the popcorn in the microwave, and you push the little button, say popcorn, and it goes and goes and goes, and then it burns your popcorn up, right? Whereas you can be in better control and set, according to your microwave, maybe 2 minutes and 36 seconds, because you've learned that. And so we're talking about tried and true methods of gaining cash, growing your cash, right? Cash value, and then how to protect that, because you want to protect and shield your money from taxes, right? So you got to think about that. And then, of course, when you need your money, the liquidity, the money is there. Okay. So there are different programs and plans and agreements that I can help you with that can structure you and help safeguard your money, your retirement money, from being on a roller coaster ride. Right. So when the market goes up or down, it doesn't matter. You're protected, because I know a way that you can put your money in. You can call it invested or whatever you want to call it. You can put your money into a vehicle. When the market goes up, you make money. When the market goes down, your money holds. You got a zero threshold, right? The worst you can get is zero. There's no -1, no -2, no -9, right? Which means, in short, that you may not be making any money. You're not earning money, but you're not losing your money. So would you think about, if you have $100,000 right now in your 401k? I know some of you have 400,000, have $1 million. I get it, right? But let's just say, for this example, you have been saving up for a couple of years, maybe 5 years, and you've amassed your cash value with the interest, $100,000. Let's just say your company matching or whatever, $100,000 in there, right? the market crashed or the market goes down, guess what's going to happen to your 401k? You're going to lose. You're going to lose. You're going to lose. And you could lose more than 20%. I've seen it happen over and over. I've seen it happen in the past presidential election. I've seen it happen in this current presidential situation that we're in right now in this current administration in 2025. So we are just now climbing out, and we are now in Q4. I'm sorry, we're in Q3. We're in the month of September as this video is being made. We're in Q3, quarter three, okay, of this year of 2025. So we don't know what's going to happen next month, November and December in Q4. So that's something you got to watch out for. You can put your money into a vehicle, and I can help you do that, so that when the market goes up, you gain money. When the market goes down, you're not losing money, right? But you're not earning any money either. So you're protected between those floors. Just think about it like if you're riding in an elevator in a building, a high-rise building, and you're between the floors, and that's going to be your safety spot. So this is where zero is now your hero, and I can show you how to do that. Because you, just face it, you work too hard to let Wall Street's ups and downs and their indiscrepancies in the market, the downturns and things like that, you work too hard to allow that to control your future. And especially if you've already retired and have not started taking out RMDs or, those required minimum distributions, because at a certain age, you are required to start taking your money from your savings, whether you want to or not, because if you don't do that, it's going to create taxes for you and penalties, whether it be Social Security or what have you, right? So you want to protect your income, protect your assets, and most of all, protect this, your peace of mind. And we can help you do that. Just visit us at UnitedProspera.com to learn how you can secure your retirement. All right? You can just go down on the website, www.unitedprospera.com, and then you go on the website and go down to the booking tab. Click that booking tab. It's going to bring you to my calendar. And then you just pick whatever time you want to have a conversation with me, right? And then we have 15 or 30-minute conversation and see where you are. And then from that point, I'll go back and work my magic with my team and create a picture for you to make it better for you so that we can mitigate or at least cut off or cut out some of that pain altogether, okay? All right. So with that being said, that concludes this video. I hope it has added value to you. Let's build prosperity on purpose, and let's do that together. Look forward to speaking with you soon. Bye for now.